This is not financial nor professional advice. This video is for entertainment only. Today I'm going to talk about the effect of their passing the budget or thinking of passing the budget, what effect that's having on the stock market. And then I'm going to go into two stocks that I'm watching for when I jump back into the market. I'm probably going to jump back with these two stocks to start with. The stocks I'll be talking about is Digital Turbine, whose symbol is APPS, APPS, and Arcbest, ARCB is its symbol. We kind of had an unusual day in the market today, didn't we? I mean, it started out and looked like it was going to be a continuation of doom and gloom, and at the last couple 2 hours or so, it showed life, and the market ended up positive, which is very good. And it did this because Mitch McConnell sort of caved in finally. I think he's getting enough pressure from people saying, no, you shouldn't be risking the credit of the United States over politics. And so I think we're going to get some reasonable compromise. And the Democrats will be compromising because of Kristen Sinema and Joe Manchin. They basically are reducing the size of the infrastructure packages, especially the social infrastructure. It's going to end up being somewhere around 1.9 trillion instead of 3.5 trillion. So a reduction of at least 40%, it sounds like, which I don't know, it might be a good thing, But the main thing is that they passed this. I mean, along with the regular infrastructure bill, this is still massive stimulus, and this is what the country needs. Now, the market turned, and now we should expect it to continue to go up now, shouldn't we? The problem is I don't think it's had enough of a correction. I mean, it's down, I think, like 5%. The smaller stocks have taken a bigger hit, though. So there's kind of been an internal correction, if you will. So there is that argument. But I think the big caps, that ran up so much, they're the ones that need to come down. And they haven't come down that much. I mean, maybe 5%, and it's kind of a stretch to say that. But I'm looking at companies that are likely to do good. I'm more or less waiting for a solid marker that we have indeed turned. We either haven't turned or we do another leg down. And actually, I'd be more reassured if we did another 5%, because then it would be a 10% correction, and you could assume that, yeah, that was a correction, and it didn't decimate anybody, but it got our attention, let's say. But I'm looking at companies. I'm going to dive in once it either goes down another 5% or it turns around like it means it. And I want to see a couple days in a row of going up, and then maybe some minor moderating, some backfilling. But we can't have this constant diddling around. I mean, it's just not good. But I am noticing companies that have very solid ratings. One of them is Digital Turbine, and I already did a video on that, and I will go over it a little more today, but you might want to look at that video on Digital Turbine. Its symbol is APPS, APPS, because it installs apps on your Android phone. It makes it easier for Android users to put apps on their phone, and also it's involved with advertising on your Android phone. And they've got sort of a monopoly on that in some ways. As we look at the chart, what I like about Digital Turbine apps, APPS, is that it's only $7 billion. Now I say only $7 billion, but in the world of the big caps and the world in which you live, that's considered, a fairly small stock. So you can really make money on this. Um, and his price, it's less, it's $73.50. This is the kind of thing. It's not 3,000 like Google. you know, um, you can make money on this stock, and in the last month, it's really taken off. As you can see from the chart, it was like 63 at the beginning of the month, and now it's flirting with 75. This is a stock that I think you can make a lot of money on. Now, if I just had guts enough to get back in the market now, this will be the first stock that I buy. But I want to see at least one more solidly positive day with no freaky political news. Uh, if I'm given that, maybe I will jump in. But I got to see that uptick. And as we look at the Vector Vest ratings of digital apps, I like Vector Vest because they break it down into categories so you know kind of where their head is at. And they seem to be just an overall excellent service. But they rated extremely high in upside potential, which is kind of the main thing. They give it good timing, and that's the main thing when you're initially buying a stock. Is you want to make sure you're buying it at the right time. The safety is good too. It's reasonable safety. 1.27 is fine, and that's probably reduced a little bit simply because it's gone up so fast. But I still think it has a lot to run. Its overall score of 1.58 is very good. You seldom get scores above 1.5. So if you get a stock rated above 1.5, you've got a very good stock. The other company I'm interested in is Arcbest. That's ARC Best, and its symbol is ARCB. And this stock, it's a logistics stock. They take the container from it being shipped across the ocean and they get it trucked to where it needs to go. They handle all manner of logistics, ocean container to trucking at the last mile. Now today, Arcbest went up about 2% and the market went up about 0.5%. And that's really impressive when you consider in the past month, it's gone up 26%. So this is a hot one. And you know what? When you buy stocks, you want to get them while they're hot. You will make way more money buying stocks that are hitting new highs than you ever will trying to bottom fish. It's people's instinct to bottom fish, and too often they're buying a stock that's just going to continue going down. Stocks are like inertia. If they're in motion and they're going up, they're likely to keep going up until something happens to disturb that motion. But I've gotten so I'm not afraid to buy a stock at a high price. I'm afraid to buy a stock at a too low of a price. Now, that's within reason. I will still try to catch the stock on a minor swing within the day and kind of use chart analysis to a certain degree with that, just real basic chart analysis. But don't be afraid to buy a high stock. I made lots of money on Tesla, and I bought it when the news was saying this is crazy. It can't go up this high. Well, it did go up too high, and it's catching up with its valuation now. And I think my impression with Tesla is we got another leg to drop before I'm going to jump back in there. But with Arcbest, this is actually a good sign. And the shipping industry, the thing of it is, when it's hot, and when it's not, it's not. So timing is very much an issue here, and we want to look at that. But they're doing better than the other companies in its sector. This company's gone up about 26% in a month, and the S&P and the transportation industry, which it's a part of, have both gone down about 5%. So it's a standout. Analysts are expecting Arcbest revenue to go up about 25% for the full year and to go up over 100% for their earnings. So I think there's something about there being such a container problem and there's such a supply chain problem that people are desperate to get a good shipper. The transportation industry that Arcbest is a part of has a forward price to earnings ratio of about 16. And just to show you how profitable this company is, their forward price to earnings ratio is about 13. So it's not overpriced. And taking a peek at the chart, we can see that it's a $2.25 billion company. So again, you got that small, relatively small market cap where you can make lots of money. The PE ratio is 17 here, but that's your trailing price to earnings. That's not their forward price to earnings. Their forward price to earnings is 13. So we're likely to have continued upward movement. I consider this kind of a swing trading stock in many ways. I think you want to get in there while it's hot, maybe catch it on a momentary pause or some consolidation, and then I would swing trade it. We're probably going to have things clear up, I would say, in the first part of next year. In my mind, when the time gets right to jump into the market, I'll probably buy some of this and keep it for a couple months. But I don't see it as a long-term trade simply because it is in an industry that when it's hot, and when it's not, it's not. Also, looking at that one-year chart, it does have that slope, doesn't it? So it can be up and down. But I think they're desperate to have shippers that can handle the situation. And I think this company has shown that it can handle the situation. And I think it's going to have a couple months of growth in a major way. And so we want to catch it and then invest it in something else. And on VectorVest, this is the highest rated stock of all the stocks I look at. Upside potential, safety, timing are all in the green. Especially look at that timing score, 1.84. This stock is screaming that the time is right. And I think it is one that you want to jump in and get in there while the time is right and then get out when the time is wrong, which I will let you know when I jump in and when I jump out. I think it's too tempting probably to pass up. It'll be a couple of months of good growth. It might go beyond that. I just don't know how long the supply problems are going to last. The funny thing is, I think it will be especially hot as long as the supply problems last, because what I suspect is that they're handling the difficulties much better than others. That's all I have for now. I'll keep making some videos as soon as I can when I see a hot stock that I think we might want to grab, and especially when I'm convinced that it's time to jump back in. It's going to be all hands on deck. Be sure to like and subscribe, and I'll see you in the future.